Shares of Reddit are rocketing higher in overtime after the company reported a beat on revenue in their first ever earnings report since going public in March. Strong guide, user metrics as well. Joining us now to discuss is Rohit Kulkarni, Senior Research Analyst at Roth MKM. Hey, good to have you. So about 4 weeks ago, you initiated Reddit as a buy when it was at 40, price target at $50. Here we are in overtime with the stock at 57. What do you need to hear from management to convince you it's still a buy?
I think it's still a buy. I think there are a ton of catalysts ahead. I think they are staying prudent and conservative on the guide. The number of users that they are adding, accelerating user growth in every quarter over the last 4 quarters, that's the best leading indicator for any social media platform. And this company is adding more users than any other platform at their size and scale. Remember, this company has more users than Pinterest and more users than Twitter in the US. That's where they make 80-85% of the revenues. So still, it has a long way to go in terms of monetization. And plus, they have the AI deals, the one with Google and probably more with others. So we like it. We like how they are executing. And I think they are being prudently conservative.
How much are they dependent on those AI deals really panning out and being a consistent and growing revenue stream for them versus the more traditional advertising based models of social media companies?
I think over longer term, they still will have maybe 80-20 split. Right now, they're like at 95-5. Longer term, I think majority of the revenues will still come from advertising. Remember, the AI deals are just going to be margin accretive, and they're going to open up new types of customers that probably are not going to be advertising on Reddit as much, for example, Google. So it's a completely new set of customers, better margins, and probably completely incremental revenues, no cannibalization. So I feel it's a perfect complementary revenue stream. Historically, Twitter had that, but it was a declining revenue stream in terms of data and licensing. This is something with the AI tailwind we have. It's going to be increasing and growing thicker, but probably 20% at scale.
Okay. Net loss driven by IPO expenses. First profitable Q1 on an adjusted EBITDA basis. Also reporting positive free cash flow of $29.2 million. How does this speak to the path to profitability? Are they moving quicker than everyone had been expecting?
I would say significantly quicker, Morgan. I think 6 months back, if anyone would have predicted, I think this company would have been GAAP profitable by end of 24 would be a positive surprise. What they're doing right now with the way they're adding more users, increasing monetization, and just showing that they're just getting started with monetization is a significant leapfrog in profitability. And remember, the profitability is also coming from accelerating revenue growth. So it's not at cutting costs and cutting corners and reducing kind of growth-related spend. It's more from upside to revenues, more from better execution. So I feel more bullish on this name. First print out of the gate and significantly exceeded expectations.